All right, so Microsoft announced its Q1 FY26 earnings, and they beat expectations, strong revenue growth, massive commercial growth, massive Azure growth. They talked a lot about Microsoft 365 Copilot, not surprisingly, and the growth that they're having there. Amy Hood, CFO, put some interesting quotes out there about value and where they're focused. I'm going to talk about all this. I'm going to get into the numbers. But here's the thing. All of you customers out there that have EAs, SCEs, right, things like that in place, you all probably know by now November 1st is passed, and we're now in the new age of Microsoft, which is there is no more volume discounting. Tiered pricing, the Bs, the Cs, the Ds, gone. So you got to get ahead of things. So paying attention to how they're reporting the results, how they're performing, where they're focused, what they're saying has always been important. But now more than ever, it's incredibly important as you build your planning, as you build your strategies, as you think about how you try to get ahead of your next renewals, which likely is in December or next June. I don't care even if it's further out than that. You got to start now. Always challenging, even more so now. Let's get into the numbers. So from a total revenue perspective, about $77.7 billion, up 18%. That was ahead of the analyst community's expectations. They were thinking it was going to be around $75.3 billion, all right? So a pretty big beat. Margin percentage, 69%, which is a slight decrease from them because of the investments they're making, infrastructure predominantly, AI, R&D, innovation, right? Cost money. But a 69% margin is pretty good. So before I move further into numbers, right, this is a big one for me. I would always be putting this and have this at the ready when Microsoft comes to you with some ridiculous price increase, especially now that there's no volume tier discounting, and especially because many of you don't have renewal protections in place. I'd put this in and say, listen, let me understand this. You want me to increase? You want to increase my price, my total cost profile? Okay, we're going to talk about that. I know your margins are 69%. So how much is too much? Like, what do you need? My margins are like 10%. There's single digit growth. So let's just really take a step back here, right? This does not feel right. Does not feel appropriate. Now, I mentioned commercial bookings, big growth, 112%. Now, this was largely tied to OpenAI, as well as $100 million plus contracts for Azure and Microsoft 365. But OpenAI, big announcement came, about $250 billion commitment made there for Azure services. So certainly that has a big impact on this number. If you think about the cloud, Microsoft cloud revenue, that's $49.1 billion. So almost the $50 billion of the $77 billion from a total company perspective. This is obviously very important. You all know that. The cloud is important to them to drive their growth. Cloud could be M365, D365, Azure, so forth and so on. The commercial cloud, Microsoft 365 commercial cloud revenue grew 17%, largely tied to ARPU growth, average revenue per user. That's tied to upgrades to E5. That's tied to attaching Copilot. I'm going to get to that in a minute. And it's also tied to seat growth, right? There is still some seat growth out there as part of this equation. LinkedIn revenue, that's part of cloud, right? 10% growth. D365, that's part of that cloud revenue, 18% growth. Obviously, that's an area with this competitive landscape. On the ERP side, you got the SAPs and the Oracles of the world. On the CRM side, you obviously have Salesforce. So think about that in terms of where you may be able to continue to position what you've already given them in terms of market share. That's important. But also, if you're in a place where potentially you could be leveraging in a competitive environment, right? Always trying to find ways to add leverage into Microsoft negotiations is critically important. Azure, 40% growth in the quarter. Last Q1, it was at 33% growth. And it beat analysts' expectations. They were expecting the growth to be about 38.5%. So this is a highly competitive area, GCP, AWS, hyperscaler, right? Play this card correctly. Make sure that, again, where you have an ability to create leverage through alternatives, create leverage through market share discussions, you have to use it. And you have to use it in unison with everything else. You cannot keep things siloed. Product here, Azure here, unified support. Now let's talk about that. Enterprise and partner services, 5% growth. A lot of customers are considering moving off. A lot of customers for unified support, rather, are considering moving off, to be clear. Tie this together, even if you have different renewal dates. Like I said, even if your Azure commitment, your Mac ends at a different time than your EA, you have to pull this all together. You have to. Now, Copilot. Two real things. Number one, they talked about the growth is accelerating, 50% growth quarter over quarter. What that means is they get customers in at a certain volume and they're growing the usage. It's not a consumption-based product, it's still head count, but if you start with 300 heads and then you move to 5,000 heads, that's important. Make them earn the 300 though. Don't let them tell you it just needs to stay list. Tell them you understand the story they're telling the financial community. Once I'm in, it'll grow. Make them earn getting in. Make them earn in getting in. Not just in the upfront price, $30 per user as an attach. The underlying product, the E5, the E3, make them give you the appropriate price there. In-term pricing, volume discounting, price protections at your next renewal. You have to bundle this together as one negotiation. In terms of guidance, they're expecting revenue to be 79.5 to 80.6 billion. That beat the mid-range from it. They thought it would be about 79.95, or the analysts did. They're expecting 13% growth in Microsoft 365 commercial cloud revenue. They're expecting Azure revenue to grow 37%. So all healthy numbers. And again, that's their Q2, right? Which ends in December. So a lot of you have deals. Here's the thing. There was a quote that Amy Hood said that I think is very important. She talked about the fact that they are going to be focused on delivering value. She talked about the fact that they know that they're going to be able to deliver value, which is why more usage is going to happen. So all of you customers out there that are thinking about doing an as-is EA renewal and haven't gotten the full value of what you've already given them, put that quote in front of them, your sales rep. You want more stuff? Growth of what we have, or more products, Fabric, Sentinel, whatever it may be, fine. I heard your CFO say you were focused on value, so here's what I need you to do. Give me the right pricing for the things I already have. Equate cost to value. I'm telling you I'm not using everything. Stop focusing on new and start focusing on that equation. Fees for value, and maybe I can give you more. But until you get me the right baseline, I'm not gonna go there. I can't go there with you. And that's why Azure and unified support, LinkedIn, all has to be pulled together as well. Build that one story. And again, now more than ever, now that November 1st is gone, it's come and gone, and now there's a new world of Microsoft. You have to get ahead of these negotiations, and you have to make sure you have a unified internal communication plan, and you have to have the right plan, period.